Good morning, good afternoon, everyone. Welcome back, and thank you for joining us today for our virtual lease accounting workshop. My name is Janis Parthun, and I'm the VP of Product Marketing here at EZLease, and I'll be your moderator for this session. And now I'd like to introduce our presenter for this session. I'm pleased to have with me today Janis Parthun, who's Vice President, Advisory and Project Services with RGP. Janis, do you want to give a little bit more background on who you are?
Sure. Thank you, Janet. So just a quick introduction of myself. I'm Janis Parthun, a VP within RGP's Advisory and Project Services team, and I lead a number of cross-functional initiatives within finance, accounting, and risk and compliance. And really my background and specialization is focused on technology and process design, risk management, and driving continuous improvement for companies. And then a little bit background with RGP. RGP is a global consulting company that serves over 2,000 clients across multiple countries, and RGP enables rapid business outcomes by bringing together the right people who together create transformative change. Now, I'd like to just go over the agenda. I'm excited to be speaking to you about the implementation process for GASB 87 and ASC 842 and really share perspective. You've heard some great insights from the earlier sessions today, and now I'd like to walk through the roadmap to implementation and to dive deeper into the data collection phase as well as the day 2 process design phase and other considerations. But then before I start, we have our first polling question.
All right, great. Thanks, Janis. So the first polling question today that we're gonna kick off with is: have you started your data capture yet? I know Janis is you're gonna get more into some of the data capture pieces here, I think, but it'd be interesting to see where people land with this question. I don't know what's your thought on where we might end up.
Yeah, it'd be interesting in seeing this too, just because we have some of the data and the responses in the prior year, but as with the effective date, just be interested in seeing the progress in that and the response in terms of this audience here. So I'm curious as well to see what the response is coming out of this.
All right, excellent. So not super surprised that we have folks here who haven't started we have a pretty good sized GASB community on the workshop today. So I'm assuming many of those are in that bucket. Starting to gather, I mean, you folks have kind of realized this is not a one-day project, right? So I'm glad to see that. And already adopted, like I said, you guys are almost 16%. Must be thrilled that you've passed this milestone already. And with that, let me see. I'll flip it over to you, Janis, and you can talk through the next slide.
Great. Thank you, Janet. So it's interesting to see the response from today's webinar. Now, I wanted to share this. This data is from the past virtual summits held, and it is from the Lease Accounting Adoption Market Snapshot from EZLease. And it's interesting to see that, at least from last year, the responses were fairly close between the two surveys with GASB and FASB, where 24% had not started their compliance project, while a third were in the planning phases. But as you see now, at least as of today, there's a smaller percentage of attendees here who have not started, and more so at 38% who's already started on the implementation or at least the planning phase of the process. So I think just also having to tie to the effective dates and how we're already in 2022, that it makes more sense to have more percentage of folks starting this planning phase. Now, I'd like to start talking about the roadmap to implementation. While there's every successful implementation, it really starts with defining a plan and the roadmap to stay on track. And here are 6 phases that I recommend. In the impact assessment, the initial step to designing your roadmap by gaining the understanding of your lease portfolio, scope, or the extent of the need, and the possible gaps. The accounting policy, wanting to consider the accounting policy decisions early on and how it may be incorporated into your implementation. Now, system selection, you'll want to consult stakeholders about the outputs and the features that they need to determine the right software solution. The data collection, gathering leases and extracting applicable data really takes longer than any other activity. It's also important to spend the time to evaluate thoroughly so you're not having to redo certain activities. Software implementation. It's important to partner with someone with prior experience, whether it's in-house or having to have a consulting firm work with you. And then the day two process design. You want a system with processes that are sustainable for ongoing activities. So it's important to carefully design the processes, the roles, the controls, and supported by automation in order to be ready for day two. Now today, what we'll focus on really is the two key phases of the roadmap, which is the data collection and the day two, which is what I'm going to talk more about. And before we dive right into the data collection, we actually have the next polling question coming up as well. So I'm going to move that over.
Great. Thank you, Janis. So the second polling question we're going to have today, or we're having, is what type of data do you plan to capture across your lessor and lessee portfolio? So it'll be interesting to see what folks say about this, because I know depending on whether you're a lessor or a lessee, you're going to have a different kind of mix of leases, and both for equipment and real estate. And then it'll be interesting to see what they come up with here. I don't know, Janis, if you have a comment that you want to add.
Yeah, I would be interested in seeing this as well. And part of it, in the discussion coming up is talking about having to scope and determine what makes sense to be gathered and collected and uploaded into the system. So I'd be interested in hearing what the audience, at least initially, intending to do.
All right, let's see what the audience here has to say. All right, so a lot of focus on long-term leases here, which is not too surprising considering the standards and what they require, and all of the above. Also, kind of the strong leader here, of course, for all the different players here. Do you want to add anything to this before I move forward?
No, I think just it's a perfect timing and segue into the next discussion, and then we'll talk about scoping as well. So I think this is in great alignment. Yeah.
All right, perfect. Back to you.
Great. Thank you, Janet. So in terms of the data gathering process, it's just a great segue from the prior polling question. The data gathering really is an iterative process, and I recommend plan outlined here through steps 1 through 5. And with step 1, having to organize the lease document, gathering the PDF files for all the leases, that requires abstraction. Step 2, developing a collection plan, determine the most cost-effective approach to gather the necessary data elements from the contracts. And then step 3, abstracting or extracting the data. So based upon the collection plan, abstract or extract data elements to upload templates. Now I want to elaborate a little bit more on step 3. So in terms of with data abstraction, this pertains to aggregating the contracts for evaluation. And then with data abstraction really requires aggregation of the actual lease contracts into some sort of central repository, which could be SharePoint or a Box account, something of that sort, and requiring a team of data abstractors to read the contract and abstract the required data elements necessary for the chosen lease accounting platform. And the abstractions can range from 25 to 100 data elements per abstraction, depending on the type of the lease. Now with data extraction, this pertains to extracting existing data that's already available and transforming it into an acceptable format. The data extraction may involve transferring data in existing electronic repositories to the required upload templates of the selected lease accounting platform. And there are many potential sources of extractable data. This could be existing repositories, such as from spreadsheets, could be upstream systems, perhaps from real estate systems if you have a separate one, or vendor-related repositories. But then there's also likely required data elements, additional data elements to complete the record information in the upload templates, such as having to add the GL account or the cost center or the asset category, having to tag to equipment or real estate, things of that sort. And then for step 4, the data validation, having to require a second validation lead data analyst. Validation really is based on the sample and the coverage criteria, and then strongly recommend coordinating to the extent with the external auditor, just to be able to have an understanding and possibly reduce some substantive audit procedures at the year end. It's always good to be able to coordinate that and have that discussion with the external auditors. And then, of course, the last step, step 5, having to upload and validate the data. So load the validated upload template to the system and reconcile for completeness of the load. Now, developing a complete lease population, you'll want to consider identified leases and unidentified leases. So in terms of the identified leases, you'll want to obtain the inventory of the identified leases and reconcile the identified leases to the general ledger for completeness, complete random contract reviews to determine data sufficiency, and you can also validate using data analytics. So this may include general ledger analysis, such as sampling a general ledger transaction coded to selected rent or lease accounts to test the proper inclusion and exclusion from prior footnote disclosures. This can also be accounts payable analysis, such as sampling accounts payable transactions to test the proper inclusion or exclusion in the prior footnote disclosures. Now for unidentified leases, you'll want to determine the methods to search for embedded leases and complete the education and the inquiries of purchasing and other relevant personnel. So really before executing though, it's very important to provide the training and the education. In terms of for embedded lease training, this may include being procurement focused or having finance involved and developing a process for contract identification and the segregation for further analysis. For embedded lease reviews, having to think through scoping considerations, policy considerations, detailed review templates, and documentation. And then speaking of embedded leases, an embedded lease scenario maybe when there's a service arrangement with specified assets or when terms require both the customer and the provider combined to make decisions about the use of the asset. It'll depend on whether the control of an asset is transferred through the rights to use the asset as stated within the contract. And then, although keep in mind how the control of an asset is defined for the standard applicable, so between GASB and ASC. But then there are examples where it might not be an embedded lease, such as under ASC 842 for a customer furnished asset, when the customer provides and drives how the asset is used. Or, such as under GASB 87, we had a scenario where there's a government unit had a large amount of agreements pertaining to its land where they thought were leases as the leaser. But then upon the contract review by the RGP team, it's discovered that the opposite parties were only allowed to access the land and didn't really provide the right to determine the nature and the manner of the use, and therefore are not leases. So when you have determined what scenarios to be included and to be excluded, this can help reduce the scope population as well as the time and effort to abstract the data. And then also just from a scoping perspective, how far do you want to capture? Do you want to evaluate how much history you like to include for business comparison or analysis purposes? And then I'll also explore a little bit further on the different scenarios a couple slides down. Now, I'm going to dive a little deeper in terms of talking about the data collection process. So to dive a little deeper, I like to illustrate the abstraction steps. And here we have two popular types of lease examples, real estate and equipment. And these are examples of data fields required to include in the upload template. And as you can see, between real estate and equipment, you can see the first two fields are the same in terms of what it's asking for, vendor data, the start and the end date. But then as you continue further down, the fields become more different and unique in terms of the type of lease. Now, in terms of the unique data fields, you can see, for example, with real estate, there's a tenant improvement allowance, or there's a contingent percentage rent, which would take a bit more time to evaluate and consider. So to explain a little bit further for the unique data fields, for example, for the tenant improvement allowance, it's money given from the landlord to a tenant to help pay for improvements, such as an office space. So it would take time to be able to read through the contract and determine what the information is to be able to place there. And then, for example, with contingent rent, is rental payment that varies with the future amount of a specific factor that's not related to time. Again, that's something that would take a little bit more time to read within a contract versus for equipment having to identify the serial number or the asset owner, which is something that's a bit more direct and specific. Now, as you can see, the unique data fields require a little bit more interpretation, as I mentioned, required some additional time. So it is important, and can't emphasize enough, that it's important to scope to simplify the collection process. And so scoping really sets the stage for this step 3, the abstracting data. And the question may be, is the effort primarily for accounting purposes, or is there interest to incorporate administration of leases, or the extent of history to capture? And these are decisions that you'll need to make during the planning process to be able to advance forward. And likely, having to tie to the polling questions, depending on what your intentions are, that would be the questions in terms of what you intend to collect and include in the lease accounting system. Now I'm going to go into a little bit more detail regarding the collection of the data elements. And as I mentioned, to assess the amount of the time and the effort needed to abstract the data elements from contracts, this can add up significantly. To illustrate a little bit further, in terms of the same two examples that we discussed earlier with equipment and real estate. So if you look at the approximate hours to complete the abstraction, having to look at equipment again, these are estimates, but estimating at 2 hours, and then real estate estimating at 3 hours, depending on the type of lease and your portfolio. And earlier talking about how the real estate may have more data fields requiring analysis in your portfolio, the accumulation of all the hours combined can add up. So in this case, and if it's heavily weighted in real estate, which is in this case, the more analysis is needed, and it can lead up to over 200 hours in this scenario. So in this case, with 20 equipment leases and with 80 real estate leases, the timing of that plus the amount of time to abstract that for each of these unique leases can really add up. And then I have an example, which I will actually elaborate a little bit further, but I have an example where for a construction services company where had encountered some data collection challenges related to the upload template. And this is due to receiving the data in various formats and creating upload errors in the process, and really added time required to collect this information. And a simple example may be a street address. So if a street address where you are collecting information, but then they're coming back in different formats, it could be challenging. So let's say for a street address, some of them are spelled out with the full letter street, or some could be ST dot, some could be ST. So some of these small nuances can also create some challenges depending on how you're collecting this information, how you define the process to collect that. So it's just an illustration, but the time and the effort associated can add up significantly if it's not necessarily planned ahead of time in the beginning. So again, just an illustration, but just wanted to provide some background and scenario on that. So, you know, we mentioned, at least I mentioned a little bit about embedded leases. So I would like to call attention to some of the unique scenarios and revisit embedded leases that was mentioned. And going back to lease accounting basics, you want to understand whether you have an asset that is identifiable and controllable. And in exchange for consideration, if it's under ASC 842, or in an exchange-like transaction, if under GASB 87. But what's tricky, but not uncommon, is having to have within a service arrangement containing the right to control the use of an asset. And this is an embedded lease. Leases contained within larger contracts or arrangements. And assets that are identifiable, such as when a contract includes assets or equipment that's customized to customer specifications, and it's controllable, such as when the asset is exclusively for the customer and any change requires customer approval. So examples may be IT service contracts, such as pertaining to servers, computers, or co-locations, having the right to use dedicated servers or racks. And see this applicable to industries such as financial services or healthcare, having to contract with its hosting provider to provide dedicated servers customized to them due to the sensitive data involved. And then also see this applicable to government agencies contracting with its hosting provider to have dedicated servers customized to them just due to the sensitive data involved with PII or agency-related data. Another example may be transportation and delivery obligations, such as rail cars and trucks, having the right to use specific fleet or rail cars or trucks for delivery. Now, a different unique scenario involves variable leases. So one example may be where a company or entity that leased to use a retail building for 2 years, let's say, and pay based on a fixed fee plus, let's say, 5% of incoming merchandise sold, or essentially it's revenue performance, which equals the percentage of the revenue. And this is where the leasing perspective, you'll directly expense the 5% since this is performance-based. Another example, government entity-wise, may be a school district that is leasing buses for 2 years and pays based on the usage of miles driven. And this is where you directly expense as well, but you still need to disclose this information. Now, alternatively, if the company subleases, you'll want to consider the asset component when a primary leasee or the intermediate leaser subleases a portion of a larger asset, such as if you're subleasing one floor of a 5-floor building. This could lead to accounting for 2 separate assets and to record separately, one as the leasee and then one as the leaser. Now I have one more scenario to highlight, and this is expenses associated with leases. So leases may include non-lease components, such as leases of office, commercial space, that often contains provisions to include common area maintenance or CAM costs. And some clients opt to separately record and exclude the CAM from the lease accounting systems. But then additional steps are needed during the monthly reconciliation between the AP and the lease accounting subledger if you exclude. So you want to keep that in mind as well. Now, what I like to do is highlight and go over a few case studies before our next polling question. So let's click on to this next one. So in terms of the case studies I like to share, actually I have 2 with the public university system that it's a great comparison that I thought was important to share. So in terms of the first example or scenario I'd like to be able to share, we worked with a large public university system that had multiple campuses and hospitals with over 100 process owners involved. And it faced multifaceted challenges in implementing the new lease accounting standards. They also had carried about $2 billion in lease portfolio value, and RGP brought in a large team to support the implementation, and it was also led by an experienced program manager that reported into the PMO office there. The challenges, though, that we had encountered, one was that it's a decentralized organization between the campuses and the hospitals, and each had its own ERP system involved. And then for the data collection phase, there was a high level of effort to identify and extract the lease data because there were a lot of embedded leases due to real estate. And then the other aspect was that it was difficult in building consensus and having to have a consistent day 2 process with each of the campus and hospitals having unique processes and with the high number of process owner involved. So as a result, the client had to drive the data collection effort. What was good, though, is it started with approximately 7,000 assets to consider, and then it was scoped down to about 2,000 lease assets. And while the project moved ahead, it was completed in phases over a year because not all the locations were able to be completed as planned, just because of how decentralized the organization was, and also with the high number of process owners involved. Now, alternatively, we also worked with another large public university system, and that organization had multiple campuses with over 20 locations with some accounting complexity, but it was a centralized organization. And then also before the implementation made a number of key accounting decisions early on to determine the impact of day 2 as well as the data collection process. And then also involved a small set of key process owners. So really under 10, just to be able to best manage this. So as a result, the project itself having to implement GASB and the lease accounting system within a 1-year time frame, which is fairly reasonable, and it was a success in terms of that project. So mainly just, one of the highlights is wanting to mentioned, is to plan ahead, plan the policy, ID core stakeholders, and provide sufficient training to plan for the day two. Now, the next example just wanted to be able to highlight and share is that this is a large construction services company with about $12 billion in annual revenue. And there's a number of specialization and services as well as regional locations with over 30 process owners involved. It also faced multifaceted challenges in implementing the new lease accounting standards. So the company had designated a project manager to work with the internal stakeholders and to lead the data collection process. Now, while the accounting policies were already defined, the challenges, one was that it was a decentralized organization between the services and locations, and including for the day two processes. So the customized training for the organization became challenging to make the decisions. And this did lead to a change in the scoping, because originally the intent was to include all the leases and not necessarily include materiality. And then in terms of from a data collection phase that was conducted in-house, it also created challenges from a data consistency and accuracy during the collection, as the client revised the upload template and then inconsistent data was collected from multiple parties. And so this led to receiving data in varying formats and creating upload errors in the process, as mentioned in one of the prior slides. So, you know, again, from the example, one of the examples I mentioned, another example could just be sensitivity to certain characters where some are not acceptable. And then you have to essentially relook at the upload template and see what the errors were. So as a result, because of the data collection challenges that I had discussed, and with the effort involving the multiple parties, there were multiple stopping points. And then additional time was required to be able to reach that data consistency. And so the actual implementation time took approximately 10 to 12 months as a result due to the challenges, just the implementation time itself. And then with the final population, did manage to scope down to approximately about 2,000 lease assets. So with that, hopefully that provides some background in terms of, and a little bit more illustration to the examples. And then I think we have our next polling question.
Perfect. Thanks, Janis. So for our third polling question today, we're going to talk about kind of what processes have you looked forward to post-implementation. So if you've started your implementation efforts, do you have processes established for post-implementation? People are so focused on kind of meeting that first deadline, right, that they haven't really had, honestly, haven't had a chance in many cases to think about kind of what happens afterwards, right? And what does it look like? Is that sort of are you having a similar experience with your clients, Janis?
Yeah, I think, because this is always a great question, because it's important that while get through the initial hurdle to have the processes established, collect the information and get things set up, it is also important to think about the post-implementation because, the data is evolving. There's always something that will change. So I would agree with that, but let's see what the audience says here as well.
All right, well that's actually pretty interesting. So I think we're helping some of the folks who've not yet considered this in answer C, kind of helping give them some framework to use going forward, which will be useful. And then those who say no, but they've started planning, glad to hear that, because obviously they're keeping kind of long-term compliance in mind. And then yes, that's fantastic. You guys are already well down the road to having your processes set up properly.
Yeah, so now I'd like to talk a bit about the day two process design and highlight a couple of key points to talk through. But before that, I wanted to also be able to share some of the responses and statistics from the last year's summit. So again, looking at the lease accounting adoption market snapshot, it's interesting that, a large portion of attendees did not have the post-implementation processes in place when we last polled the audience last year, so about 20%. And I think it's actually around the same this time as well, in terms of about 20% had said yes, they started planning the day two processes, but really a large remainder of the audience have not yet. So, which is kind of a great segue for us to talk about day two and give some highlights on that. Okay, so in terms of the day two process design, what I'd like to at least just highlight is in terms of the maintenance of the data, as well as the reporting processes. So in terms of the maintenance of the data, this may include what we have listed here: lease extensions or renewals, new leases or contracts to evaluate, change in the contract terms such as modifications or terminations, and any other types of scenarios. So many of these examples pertain to change in the lease term, and departments that initiate the lease agreements should emphasize on documenting the lease terms, the options, payment provisions, and having to communicate those factors to the accounting department for proper lease reporting and disclosure. And when there's a change in the lease term, having to have estimated lease payment amounts or other components of the lease agreement, the information should be communicated to the accounting team in a timely manner so that it may affect the amounts reported in the financial statements. And then other scenarios may include event change that can trigger an update to the lease, such as a change in the interest rate or borrowing rate. But really, what's also key is having to have sufficient knowledge transfer when planning for the day two as well. So not necessarily just training one individual, but having to train across the different functions and having to have that knowledge sharing, knowledge transfer. So the data collection isn't just a destination, it really is a new journey, and it's continuously evolving. And any of these scenarios can trigger a change in the lease. So as I mentioned earlier, any of those sublease extensions, change their future plans, leasehold improvements, new lease, any of these would trigger a change. And you really want to just make sure to be able to train the people and incorporate day two activities, which is a large aspect of continuing the maintenance of the lease data and having processes in place. So from a reporting process perspective, it's having to incorporate your accounting policy decisions and having to determine that in the early phase. And examples may be embedded leases, and for GASB, it could be not having to have, or having to have understanding there's no practical expedience or policy elections or limited disclosures versus ASC, just having to have that understanding and defining your policies in advance of the implementation. And then also for, under GASB 87, there are likely a little bit less options and simpler than ASC 842. But again, it's important to determine early on in the roadmap. For the monthly close, you'll want to consider the functionality to automate and create journal entries to feed in the general ledger. But then likely there could still be, manual processes and controls such as monthly reconciliations between AP and the lease accounting subledger system. And this may be the case, as mentioned about, I think one of the examples I mentioned was the CAM-related rent expense. So it's also important to consider automated reports that can support the reconciliation process and possibly automated tools that can help facilitate the reconciliation process, such as Blackline or OneStream. And then when it comes to annual audits, it's having to have the combination of the accounting policies established, having to conduct the data validation discussed earlier, functional configurations, and audit trails maintained. So having to have the combination of the well-documented supporting details can really help support the annual audits. With that, want to talk about other considerations towards the end of the session, but we have one of the last polling questions coming up.
Last polling question, number 4. If you're currently defining your compliance plan or you have a plan underway, what is or was your top challenge to initiate the project? I know in the conversation we've had here today, it's rather obvious that certainly these are some of the key dimensions that people face when they're setting up their plans. And I know Janis has talked about a number of ways to address some of these questions. I don't know if you have a quick comment on that before we switch over to the answers that people are giving.
Yeah, I think what I was just going to say is that I'll likely touch upon some of these options, or at least response options, but I'd be curious also in terms of where the audience is selecting or where their pain points are. So it'll be interesting to see the results.
All right, interesting. So everyone, pretty close to a majority here is looking at all of the above as a pretty major stressor, if you will, pretty major challenge, which is not super surprising, honestly. I'm glad to see that budget wasn't on its own a problem, which shows the organization is willing to put resources behind it, at least at some level.
And so really the last 2 areas I want to just be able to highlight in terms of the other considerations. One is having to plan ahead and talking about from a timeline perspective, that you have some background. And then the next item is having to talk about having to have a business case for the project itself and having to ask for resources. So from a planning ahead perspective, really the key point I wanted to just highlight is that the timeline is dependent on the size of the lease portfolio and the complexity of the system functionality. And so wanted to at least share 2 perspectives in terms of the timeline from an implementation and an accelerated implementation, just because for a complex entity, there could be more upfront costs and upfront time spent just to determine the policies, to incorporate into the business requirements and the process design. And then for accelerated, if the business functionality requirements and the lease portfolio is at a smaller scale, then likely it could move ahead a little bit more quickly. But then also, referring back to the case studies I had mentioned earlier, it could be an impact in terms of a centralized versus a decentralized organization, just based on how it's structured. And then also depending on the number of process owners that you have involved with that, which is also closely tied to it, really may impact the timing of it. Now, in terms of building a business case, as you embark on this journey, it is important to have enough resources behind you to execute the implementation. And so from a people perspective, having to have multiple resources from various business units or functions is important. As mentioned before, sometimes it's not necessarily, it could be a combination of finance team and procurement. It could be having to have others just so that they're involved in the process and have that knowledge of what information to capture, what information to pass over, and to be able to share and communicate, as well as to input into the system. And then the time required from resources, if evaluations are conducted manually, And then this could be for lease accounting, for lease administration, and for procurement from a people perspective. From a process perspective, it could be centralization of lease data, systematic processes to identify, evaluate, and maintain the lease data, and having just to have alignment to the accounting policy. So, where typically, historically, historical software may just exist for real estate. It could be siloed, so you want to be able to have a centralization of that data. And then, of course, technology, just the risk element of human error, and version control from alternative spreadsheets. That's always a benefit. And then, of course, efficiency gain from a common subledger platform. So these are just some key highlights in terms of building a business case. But I also believe EZLease have a resource there, so it is in the link as well if you're needing to have some additional information to help you build a business case in terms of seeking these additional resources, whether from a people perspective or otherwise. And so, Janet, with that, this concludes the session that I have in terms of covering this.
Really glad you were able to be here today to share your expertise with us.